Hello friends, just a review of the market cycles based on the implied volatility of the entire market. These bands reflect what is on the top, IWM, QQQ, and SPY. The color schemes are matching. These are 1 year out implied volatility bands, and these are on the vertical red lines are the monthly boundaries. And we reset the dollar denomination, the whole market. We are just tracking who is outperforming the other, where the divergences are coming in. For example, here, Q is weaker, and this date is, the month is 10/26, right? So 10/26 Qs were weaker than the S&P. And the Russell. At the same time, when the market reaches these extreme bands, we should expect some reversal coming in because it has stretched out of the mean and it's going to rotate back to the mean. So every month, if it gets into some panic state on the extremes, we know that we have a bias, which we can use to either do a short-term protection for the sold puts, which is bullish bias. So we can buy some deltas, around 30, 40 deltas for the long puts for the same week we have sold the puts for collecting the premium. So in this example, if I double click this one, 12/23 all the way till the end of the month, beginning of February, there should have been no issues. It should have been a very profitable month, week after week after week. Maybe some dip here on this day, maybe some little bit loss or not. But eventually, overall, there was a net profit as given by the market. Then we got a reset because these are monthly dollar denomination resets, and then we reset and then we hit the volatility band, especially the Qs, and I think they all converged into the IWM volatility and it got in trouble. So this is where the trouble should have started. And then on the week of 2/7 to 2/13, this could have been where, let's see, 2/7/13. To 7 to 2/13, this could have been a potential not profitable. And then we're looking at 2/16, which is here, all the way till 22, 23, right? So it is still going on. So these, I think these were where we had dust didn't make it, and this is where we got smashed, and this is the reason for that. So once we are aware of these volatility bands, now this is the entire market, we can hedge it. So if we are selling puts to collect premium, and this condition is existing, it doesn't hurt to buy during those phases when you are on the top of your, it can continue to go on top, nobody is stopping it. But if it does, here, if it goes here and it does continue to move forward ahead, then you might still be okay with selling puts, right? But we don't know when these smashes are coming. We know that this is the mean reverting markets and they will smash. Nothing goes up forever, right? So these are the potential. So if I'm making $800 premium or $700 premium per contract, it doesn't hurt to give $200 away or $50 away to give the piece. And then this week, I think it held the logic when we were able to protect those expensive premiums for the same week where we have sold the puts for the same week buying deltas. And I bought a bunch of deltas to neutralize my deltas, and then that really helped save $5,000-7,000 right there, losses for no reason. So this is one approach. Now from here, which is 1222 all the way, as I said, till February 2nd or 3rd. They should not have any trouble because we are going long, at least to the mean. If nothing else, we have reached the oversold scenarios based on the volatility. Same thing here, from 11.2 all the way till 11.23. Should not have any trouble. Then we got in trouble, most likely till end of what is this? Yeah, mid to end of 12.20 or 12.10, 12.20, sorry, and then no issues, right? So these, once we are at this situation, continue to sell the puts can also be protected by buying the same week's 40 deltas as the experts mentioned. So that way, right now, if you look at currently where we are, there's no bias. We don't know it's going to go up. We don't know it's going to go down. It's going to go somewhere. It won't stay here, right? It'll either go this way or that way. So right now, since there is unknown scenarios, not to mention that we also predicted that 214.15 there's going to be energy change. The video I produced, it doesn't tell you the direction. This is how we can get the direction, but it tells you this day expect a push because this is coming from the astrophysics, the dates. Think about the moon and the ocean and the waves, right? How the moon phases impact that. So we use very complicated models, but we knew this cycles were coming. It could have gone up or down, but big move was expected. So next big move is expected. Dates already posted. I think it's going to be around March. This, I think it's coming in this window. I think I need to check my dates, but next 10 days we're expecting. I think the dates are there in the video. So I think this is one approach. And now, if it panics here, they'll be great. If it panics here, there'll be still not issues at all. And then we'll have this monthly runs up or half a month down and monthly runs up. We'll have those cycles. So this will probably add more value to the premium collection strategies. So this is how we know where the bias is. We know general biases. Now this same thing has to happen on the stock, right? The 5 stocks. The model has to be built and coded, which we will, and then track it and then see how the actual independent stock vibrations are separated out from, let's say, Qs. If it is in Qs, Nasdaq, or mostly S&P or Nasdaq stocks, right? Or maybe both. So let's. I will do some work on that and share my observations to help the great teams together. Thank you.